Crypto markets bounce, making higher lows as Bitcoin pops back above 70k. Ethereum surges 7% in a day, and those call sellers get squeezed again. And short-dated call skew catches a bid, once again as the halving draws closer and traders put bullish bets back on. All this and more in this week's Crypto Options Unplugged. Hey everyone, it's Imran from Options Insight. Welcome back to Crypto Options Unplugged. I'm in the studio again with my friend Dave Brickell from FRNT Financial. How's it going, man?
Yeah, good. Yeah, very good. Price is back up, so everyone feels good.
yeah, we held those support levels yet again.
Yeah, we did. And I think like from our conversation last week, sort of broadly correct in terms of his bit of a choppy sort of range. And then obviously we've picked up a bit this week, which is good to see. So
I always like the consolidations to last a bit longer than like a few days or a week, but it's crypto. Can't keep it down.
Yeah, I mean, it'll be interesting this week. Obviously, we had that little pump, like test towards the highs yesterday. Didn't quite make it. So there's clearly wood to chop through there. And then I think we dipped earlier this morning back below 70k. So I think it's going to be not necessarily easy to sort of break above that. Conscious as well that it's the tax repayment deadline on the 15th for the US. So this will be the final week for anyone to sell any crypto that they want to use to go and pay those taxes. So we might have a little bit of sell pressure come back this week, but I kind of feel a lot of that's done already. I know Arthur Hayes put out his piece today saying actually for the next couple of weeks we're going to see this liquidity drain related to the tax repayment. Right. But I kind of disagree with that in the sense that I think most of that selling's been done. So the liquidity drain, if you like, has kind of happened over the last week or two, which was perhaps a bigger factor behind the sell-off. I think what Arthur's referring to is over the next couple of weeks following, you're going to see like the TGA, the Treasury General Account, which is basically the Treasury's cash account, if you like, at the Fed. So when they get all this money in, that's where they stick it. You're going to see that start to build, which you kind of associate with like the liquidity drain. But I think liquidity drains happen. They've just got to process it and it reflect in the TGA. Yeah, so maybe there's a reflexive element around that. Then people see the TGA going up, they just go, "Oh, liquidity is being drained. I want to hit the sell button." But from an actual liquidity point of view, we're probably through the worst of it. Which is why now, actually, I bravely proclaimed in my Connecting the Dots newsletter on the weekend that the lows are in, and I think for Bitcoin the lows are in for this correction, and we'll now make our way to new highs. And as we'll discuss, I think we're setting up for some explosive new highs and the move to 100k.
Nice. And has the macro picture changed at all this week? We've got non-farm payrolls was a strong beat on Friday, right? Non-farm
was strong, so we still got this kind of data resilience, or at least at the surface level, this data resilience. One thing I will say is it was interesting. So, like under the hood of the data, there's signs of weakness there. Partly you've seen a fall in full-time employment, and a lot of the employment's been driven by an increase in part-time employment. But the other thing as well, most of the job creation is coming from the public sector. And this speaks to this idea around fiscal dominance and the kind of distortive impact that's having at the moment. So when people come at me and say, clearly the economy can handle higher real rates, which I'm saying it can't, the reason at the moment it can is because we're printing these insane deficits. And that kind of fiscal dominance, if you like, has replaced what before was for a decade or so the monetary dominance, where it was all driven by central banks. Now the central banks, where they've tightened, we've now seen the US government that are just happy to keep ramping up the deficits. I think it's $1 trillion every 100 days at the moment they're adding to the debt. So incredible. That's so much money coming into this market. So the bears keep getting wrecked, because they can't understand why we're not selling off. Well, if I told you that every 100 days there's going to be $1 trillion worth of new money basically coming into the market, then what would you do? And ultimately it underpins like a bullish sort of thesis for crypto and Bitcoin, and it all adds to the liquidity pump that keeps coming into this market.
And we've mentioned in a few of the last episodes about China and Japan and kind of how that plays into the whole liquidity story.
Yeah, well, so some of this, obviously Yellen's actually on her way back from China today, I think.
Right.
So she's been out there for a few days having conversations, and the interesting thing for me will be right now we've got this situation where we've got this spiraling US deficit, right, and Yellen needs people buying the debt. I mean, eventually the Fed will do it, but before
bonds have been weak, haven't they, recently?
And bonds have been weak. We sold off. We had a strong ISM manufacturing print last week, and bonds sold off, even though ISM services actually was weaker and had some sort of disinflationary data in that. But we had this sell-off, and quite interesting. Biden put in a call to President Xi shortly after the sell-off began. Now, they didn't obviously say to talk about the bond market, to talk about geopolitics and all that good stuff. But yeah, I thought that was interesting. And then Yellen's out there. And the way I see the conversation going right now is like China need to ease. They're in a deflationary spiral. They've got this property crisis going on. The stocks are on the floor still, and they're struggling to kind of pick those up. They need to ease and inject more stimulus into the economy, but they also don't want to have this currency instability that Japan have been experiencing. So what's thought in that is the fact that US rates are so high and the dollar's strong, getting stronger. So every time they try and ease, their currency starts to sell off. And then you've also got in Japan, the Bank of Japan, even though they hiked rates, and as we said, it was really just kind of
token effort.
A token effort. They're still doing effectively QE. They're still at zero rates. So their currency's been getting smashed. They're obviously the biggest competitor from an export point of view to China. So China did this mini sort of devaluation. They need to keep pace a little bit with the yen. But both Japan and China are probably looking at the US going, guys, you got to help us out here. Like you need to get your rates down. At least you need to get the dollar weaker. On the flip side, China and Japan are the largest foreign holders of US treasuries. So whilst you've got Yellen, who's worried about this deficit and funding it, and they don't want yields going higher, their two biggest buyers, they need to incentivize to buy the debt. So I kind of feel it'll be interesting to see how we trade this week. I think you'll see like 10-year yields come lower. I think you'll see the dollar weaker, because the kind of quid pro quo conversation I imagine with Yellen is like, look, we'll ease up. We'll keep Mr. Powell dovish. We'll ease up on any kind of hawkish rhetoric on our side to keep a lid on rates, and that will take the pressure off your currency, and if you can then buy our bonds. So I kind of think there's these games that are going on, and there's a deal to be done. So
what about CPI though?
I think this will be interesting.
CPI is due tomorrow.
Yeah,
could that put a spanner in the works on that theory?
I think it makes it optically more difficult to implement. But then, you know, we've seen Powell frustrating everyone. He's kind of we've had a few strong like PCE prints, and he's kind of said, look, there's bumps in the road. I mean,
he's basically saying transitory without saying transitory.
Yeah, and I think, and this is why I think gold's reacting. I think they've pivoted to this unofficial higher range target rather than the spot 2% target. I think they're kind of happy as long as we're in the 2 to 3% zone. But obviously they can't ever say that, and they won't say that. But I kind of think gold's picked up on the fact that that's what they're doing. And the thing is, so we have this like global interconnected fiat system that can't handle higher real rates, and like things will start to break, and obviously we saw last year like the US banking system started to break, and they had to come in and bail it out essentially. Right now you got Japan's currency feels like it's breaking. Obviously China in deflationary mode. So the kind of global system is actually creaking certainly more than what we'd know if we looked at the economy and some of the data. And the bond market in the US is it keeps coming under pressure as well, and they need to keep a lid on that. One other thing that was really interesting last week was so I don't know if you remember last year, Yellen talked about that in 2024 they would look to do these treasury buybacks. And again, under the guise of providing liquidity and stability to the bond market for when there's pockets of instability. So basically what they'll do, they'll buy back longer dated treasuries, 10-year, 30-year, what have you. And again, it won't be seen as quantitative easing, because they're then going to issue more front-end debt again. But just to provide stability. Now, they conducted just a really small operation last week, like $200 million worth, and so really testing the pipes for doing these buybacks. Now, again, from my point of view, you're buying longer dated treasuries, say 10-year treasuries, and you're going to issue the front end, and you're going to do that at periods of instability, or when on that part of the market, that part of the curve is under pressure. It looks like yield curve control to me. So now in my head, you've got the US preparing for yield curve control because they're running these insane deficits and they're prepared to let inflation run hot. We spoke about China, who are gearing up to do QE, right? Japan are already doing QE. Like, this is why I think these things are coming together just for an explosive move higher in Bitcoin, and we're kind of seeing gold make its move.
Yeah, the gold move's interesting. It's really starting to pick up steam. I mean, silver had a massive catch up last week, right? Up 10%.
Yeah.
That was kind of the laggard, but silver and copper are flying as well. But what about the geopolitics? Obviously, the big story last week was the idea that Iran was going to retaliate after Israel strikes on Syria. And that was very much, you could see that reverberate through the vol markets cross asset.
Yeah.
That's what I track at Options Insight,
yeah.
right? So skew went bid, vol went bid, and it didn't reset after non-farms like it normally does, because people were worried, what's the news that's going to come out over the weekend on is Iran going to strike or anything like that. Now, it has started to ease back a bit since then, but it was interesting to see, again, no real bid to bonds, no safe haven bid to bonds for geopolitical risk, but Bitcoin caught a bit of a bid, right?
Yeah.
When that news was circulating around and oil was spiking, etc. So how do you see the geopolitical story playing into it?
Yeah, well, I mean, if things do escalate more, like you say, like a couple of things that happen, oil spikes, right? For obvious reasons, then we worry again about inflation and the inflationary impacts of that. So that's going to put pressure on yields. But then also it means, ramped up war effort means the US is spending more money. So we're also worried about the deficit and that spiral. So that feeds into stronger gold. It feeds into stronger Bitcoin. So again, when we talk about capturing both like the tail risks of this market, the flip side is China holds a lot of sway now in this debate. Even when you look at Russia and Ukraine, China holds sway over Russia, or can impact there, and then also over Iran. So again, it's like it's the cards that China hold to the US to say, right, we'll help out with that. But Biden doesn't want oil like through the roof as he goes into an election. Right? US are so sensitive to that. So he's like, how are we going to do that? They've tapped out. They sold their special reserve as well. So the US can't really do a lot. So
that's interesting. So you think that China may be the ones that stop Iran from retaliating too much and turning this into a major conflict?
Yeah, I think so. Yeah.
Okay.
But what are the US going to give? Well, do you know what the US need to firstly, I think, get rates lower,
right.
And the dollar weaker, so that China can address their domestic issues. So there's so many.
Yeah, there's a lot of interconnected.
Yeah, there's so many dynamics at play right now, and I just feel we kind of, they're all coming to a head.
All roads lead to Bitcoin higher.
all roads lead to financial repression and currency debasement,
which is Bitcoin higher,
and which is Bitcoin higher. Yeah.
Yeah.
So I think we're coming up to a really interesting point. I think we had the run to the highs, and we've had this correction. the ETF flows, actually, they were negative yesterday, but they turned positive last week. Still waiting for grayscale selling to stop. Actually, it'll be interesting after this week, because how much of that is people selling, because again, to pay taxes and what have you. So we've had the correction. I think positioning's cleaner. I think the lows are probably in. Obviously, into 75k is going to be a big level to sort of break, but I think we're going to chip away at that over this week, and then we'll accelerate. And actually, I think whilst the gold bugs don't necessarily like the crypto bros, gold for me is still a really good signal. And the fact that even as we've priced out rate hikes and we've seen sort of yields moving higher, which normally is negative gold, the fact that gold's pumping tells you a couple of things. A, on the fact that probably real rates are coming lower. Now, whether that's through inflation higher and nominal rates kept artificially low, or nominal rates actually come lower, I think it's telling you about that. I think it's also telling you about some of the sort of geopolitical fragilities that are out there. And I think Bitcoin has had its massive move. Someone said to me today, actually, like, oh, why is Bitcoin like not catching up with gold? I'm like, Bitcoin's up 50% plus, gold's up like 15%. Like, everyone should like maybe chill on that.
Yeah, that's funny.
So maybe maybe gold's playing catch up with Bitcoin. But I do think the gold move, given what we're seeing in the rates world and what have you, is telling you that all is not okay. And I think once we get through this washout and maybe even this sort of tax payment window, then I think we're set up to have a bit of a flyer for this quarter. And I think we'll see 100k trade. And obviously we've got...
Well, speaking of 100k, looking at option flows this week, I did see some people buying the end of year 100 strike calls. Check out what else I saw in options this week. Okay, so in crypto vol this week, let's look at Ethereum realized, because that was a little bit more interesting. We obviously had that big drop this time last week. We then kind of stabilized, didn't do too much, but we got that big 7% rally yesterday, really kind of putting the cat amongst the pigeons. Bit of a short squeeze there, some calls, bit that got sold needed to be covered, and we therefore saw this uptick in realized back into the kind of low 60s after it had settled in the mid 50s for most of the week. So that's what we're seeing in realized vol. If we then look over at what term structure did, not massive moves, but we did see a little bit of a flattening in the term structure. So the front end of the curve, you can see moving up a little. That's the gamma. That's the super short dated gamma. People not really wanting to sell it because of the halving, and generally because it looks like certainly in Bitcoin, some players are a bit short vol here. So they're keeping some volatility carry in the front of that curve. Back end vol, however, starting to trickle a little bit lower, but nothing material. Still pretty elevated up near 80 vol in the back. So that's the term structure. And we did see similar moves in the Bitcoin term. Then if we look over at what we're seeing in flows, the main BTC flows, we saw some put buying in various maturities from April and May. But we also saw a bullish risk reversal getting sold. That's the 64k puts getting sold to fund the 71k calls. So it's a bullish risk reversal, taking advantage of the fact that there was a bit of put skew that came back into the front end to try and get bullish ahead of the halving. Other bullish trades, April to June, we saw 75k to 85k calls. And we are now starting to see this more consistent flow in December, 100k strike calls that continue to get bought. So it looks like there is a vol player out there who's happy to accumulate these slowly, and we have started to see that over the last couple of weeks. If we then move over to Ethereum flows, some put spreads getting monetized in the form of 26th of April, 31, 2600 put spread. We did see some call selling into super short dated expiries, but as we said, the market is now blasted through those strikes and created a need to cover some shorts there. So we think that might have kind of helped fuel the rally yesterday. And then we saw some call spread buyers, 37,400 here in decent size in April. And we're also seeing some May and June calls, call spreads, call calendars trading, as well as obviously still people are fairly balled up on Ethereum, thinking that the move might take a bit more time. Personally, I prefer going even longer out to September or December on Ethereum, so I don't think it's quite as clear. but we are seeing some activity in May and June there. And then if we close out, we've got skew. Skew's always pretty volatile in crypto markets, and this week was no exception. Obviously, we had quite a bit of put skew come in Ethereum last couple of weeks. That 1 month skew got stretched to about 5 vols for puts, but you can see it's collapsed straight back down into call premium. So we're looking at about a 3 vol call premium. Bitcoin also a little bit higher than that, but similar sort of story. So basically, the crypto market deciding the correction was kind of done. People were happy to monetize puts, flip towards buying calls, and we saw that front end skew flip back into call premium, which means the options market's kind of in a bit more bullish frame of mind right now, looking for further upside going into the halving that is due next week. All right, that is what I'm seeing across crypto flows in options. All right, so that's what I saw. What do you think of that?
Well, Deribit traders are bullish. I like it.
Yeah.
Good to see.
Well, we are. Yeah.
We're bullish. Yeah, Deribit traders are bullish. Yeah, no, it kind of all makes sense. Yeah, I mean, I think you called it a couple of weeks ago, actually, in terms of the kind of stretched like positioning and sort of metrics, looking at put skew and stuff. That kind of was quite a good signal that we were nearing the lows and kind of marked the low point. So yeah, it feels like we're building again, positions building into perhaps into the halving and for a bigger upside move.
As I said last week, I don't think the halving is like this one day binary event. Yeah. So I do think the vol in the front end is too expensive, relatively. Yeah. So you know, that curve, that term structure is very flat, as we showed on the chart in the clip. So I think, you know, structuring a book where you're short maybe April calls against owning some May or June calls, actually that could work quite well. Because often with the halving, you get the rally a little bit after the halving. Right?
Yeah.
And the fact that the term structure has flattened so much and the front so pumped relative to realized, you could get this big vol reset in April options when suddenly the halving happens and we're still where we are around 70k potentially.
Yeah. I mean, wouldn't you want to like maybe just sell like to not be caught out directionally, like sell some puts, some April puts?
Yeah, I mean, I get, well, it's interesting you say that. I mean, by definition though, if you buy a call and sell a call, you're quite delta neutral, so it's more of a vol trade, right?
Yeah.
But if you sell a put and buy a call, then you're just uber bullish. Yeah. So it's less of a vol trade and more of a delta trade, right? Yeah. So obviously, if you're the sort of trader who wants to express your delta views using options, then selling puts to buy calls via risk called bullish risk reversals, that makes a ton of sense. And people were doing that this week, as we mentioned, right? But that's a big delta trade. Yeah. If you get the delta wrong and spot goes down, you are going to get butchered on that, right? Yeah. But I'm more thinking of it from, if I didn't want to put any more delta on right now, where's the vol opportunity? And the vol opportunity is in the term structure being too flat and the fact that front end could easily collapse 10 or 15 vol points once the halving's done.
Yeah, no, it makes sense. And like we said before, I think like my views around the halving are, but very much like the ETF, like, you know, buy the rumor, sell the news, like very much in the short term. You know, I mean, the ETF was priced in. This is definitely priced in because everyone's, you know, is known since the white paper, as Greg said.
It's not like it might not happen. With the ETF, there was still a chance that it might not get approved. Yeah. But the halving's happening, right? We know it is.
Yeah. like Jamie Dimon and people like that cast doubts on that because Satoshi might come up and change the code apparently. But that's a whole other thing. But yeah, like, so yeah, you might get like the headline thing that like you know, news is out, we sell off a little bit, but then over time, and it's why I always say you can't actually price this stuff in because it's a real supply demand dynamic. It's core like economics 101, supply demand, and over time there's less supply coming on, and if the demand continues, certainly with the ETFs and what have you, then we're just going to keep grinding higher exactly. So yeah, it kind of makes sense. ETH is obviously really interesting. It's often been a little bit forgotten about.
Yeah, people monetizing some put spreads there, getting a bit more balled up.
Yeah, and it felt to me that, funny enough as well, I put out a tweet yesterday morning, just before the move, I guess, but it just felt like everyone is so bearish ETH at the moment.
Well, the chart was looking ugly against Bitcoin.
Yeah.
You look at the ETH Bitcoin cross, it was testing that Jan low.
Yeah.
And if that broke, I mean, it had some room to go.
Yeah.
Yeah.
And it's always, again, when things are looking ugly, it's always the time to start thinking about, right, this is probably, the lows are probably in. But it was interesting. I saw, I think like new wallet addresses are like back to like the highest level since November 21 in ETH. When you think as well, like if I'd said to you that BlackRock would launch a tokenized fund on the Ethereum network, like and when they do, everyone's still going to be really bearish on ETH. Like you'd be like, really? So like, but it's like Solana's been like the golden child. I actually think a lot of what's actually sort of put a lot of pressure on ETH has been a rotation out of ETH into Solana. Obviously, Solana's like outperformed everything and been the golden child. But yeah, we had congestion problems and some allergies last week. So I think maybe that's taken a little bit of a shine off of Solana and maybe some rebalancing back from Solana into ETH.
And did you say JP put out?
Yeah, I think JP Morgan put out a piece saying that they expect like we will get an ETH ETF approved.
You struggle with that.
I struggle to say that, yeah. So yeah, so I think that probably helped as well.
Did they have any timing on that piece?
I didn't see what the timing was.
Okay.
I'm assuming not May, but the fact that they're placing a probability on it. Meantime, which makes me laugh, there's a someone's filed for a like 2x levered ETH.
Of course they have.
Like future ETF, which ironically will get approved.
Yeah, that's the riskier thing.
Yeah, so
Right,
so I'm glad the SEC are like trying to protect investors from giving like levered ETFs on the most volatile asset class out there. But yeah, so I just think maybe like the narrative shifting a little bit. We were a little bit too beaten up in ETH, clearly underowned, and I think we will get this rolling narrative throughout the year whereby, all right, even if it's not May, then we look at the next date that an ETF will get approved. And I suspect like the Bloomberg guys are putting like the probability at like 25% or something quite low. I expect we kind of build that probability higher as the year progresses and as we build in more probability of getting there with the ETF, then you'll start to see ETH outperform. Which seems unpopular to say at the moment, but that's kind of probably where you want to be if you've got quite a good trade on your hands.
Yeah, I mean the vol market's got ETH still trading at a premium of maybe 5 vols in the front, but it's not a lot in the back. It's like maybe a vol or two in the back, which is pretty cheap, I would say. And if you look at the realize is like 10 to 15 vols over on ETH. So what that tells me is Bitcoin vol is trading expensive relative to ETH, because that spread, if you're just going off realize, that spread should be much higher.
Yeah,
right?
yeah.
So there's still a bit of elevation in Bitcoin vol for the halving, because people are anticipating some rocket fuel move on the halving. But if that doesn't transpire, then Bitcoin vols could easily lose 5 vols and ETH stays where it is. And that curve will be actually priced fine from where that long-term sort of spread behaves and normally, right? So I think that gives me even more conviction that I think Bitcoin front-end vol is probably a bit of a slot. No,
it does make sense. And then, I mean, we've spoken before about, holding ETH vol over Bitcoin vol like further out. Might make a lot of sense.
Yeah, I was really hoping that level would break on ETH Bitcoin, because that would probably have created a bit of a flush out panic move to the downside.
Yeah.
And then you could have done like September or December call v call, and that would be a great setup basically. So I'm still looking out for that setup to happen if we do get an overshoot to the downside in that spread.
Yeah.
But after the little bounce we had yesterday, it's looking a bit less likely.
Yeah. And I think what complicates all of this is that I still think there's such a strong macro narrative out there right now of all the things we've discussed, that again, it's like it's hard to want to be kind of underpositioned in Bitcoin vol as well, because there's still such a big driver there and dynamic. But maybe we've had a big part of that move and actually
the point I would make on that is that you can be bullish, you don't have to be long loads of vol, right? Like we could move up to 100k, but options are priced near 70 80 vol, so that doesn't mean that owning vol on the way up is actually going to work that well for you. Right? So an example, I've got a trade on where I bought the 50k calls in June and I sold some 70k calls in June against it in a ratio. So selling more of the 70k calls. And that was a trade that's kind of grown into itself nicely. It's a short vol position, but it's allowed me to be long Bitcoin the whole way up, but not long any vol. I'm actually short vol on that trade, right?
Yeah.
So that's the thing. So I don't think it's a no-brainer to own the vol. It may be a no-brainer to be long delta in some shape or form. But you can kind of use the vol to your advantage and find smart ways to sell it. Like our friend Manvir, when he came on, was talking about like he's generally a seller of vol, particularly on the wings, to kind of help him trade around his position. So I think it makes a lot of sense.
Good stuff.
All right, cool. So we'll call it a day for this week. Hope you enjoyed watching, and let us know in the comments, do you agree? What do you think? Do you think ETH does outperform later this year? Are you as bullish on Bitcoin as Dave is every week? Let us know, and we'll catch you all next week.